Take your seats, take your seats. We still have our fourth and final session. Another exciting one. Well, raise your hand if you think there should be regulation in DeFi. So boot. Okay, they did it in the other room with the senators. Everybody cheered for the senators and nobody's cheering now. Interesting. Okay, well, last up, we have, like I said, a session that is going to be our final one. It is with Sifchain, a decentralized exchange that many people in this room might be using. Coming to the stage now, we have Jazear Brooks, the founder and CEO, and Casey Arrington, the head of business development and marketing, both from Sifchain. So a round of applause for our final guests. All right.
All right. How's it going? There we go. I'm Casey. This is Jazear. And we're going to talk about smart markets and DeFi. Let's get into it, huh? Why don't you give us basically like a data download of like what is smart markets and DeFi and how did we get to this point?
Yeah, so I mean, it's sort of a term we just kind of coined for something that has some kind of intelligence in it. And I think a use case that would be helpful for us is, if you think about the Terra crash, people kind of knew that the UST model was liable to break under certain conditions. And wouldn't it be nice if there was some kind of real-time analysis of how much liquidity was in 3Pool, what the buy and sell ratios were for UST, and so on in real time, how much can be withdrawn from Anchor at a specific point before that signals panic and further cascading of withdrawals. I think that by embedding this kind of intelligence into some either on-chain logic or at least off-chain queried logic, you could end up with sufficiently monitored risk. And I mean, we're very, very much in the early stages of that. We've played with something kind of like that, but that's, I think, the direction.
Yeah, absolutely. I think kind of like what you're getting at too is, and what I'm interested in covering a little bit more on is like from a user's perspective, like what does this mean? Like what does this mean for me as like a spot trader, a perp trader, a liquidity provider? Like how does this impact my experience with DeFi products and especially with like decentralized exchanges?
Yeah, I guess DeFi is interesting in that you take these retail people who may not be as sophisticated, and then on the other side you've got deeply analytical or well-informed traders who are all playing in the same field. And it's kind of tough to take retail and give them the access to the sophistication that the more advanced guys have. But if you were to do that in a decentralized fashion, it means taking some intelligence and essentially embedding it in the chain, in the protocol. I feel like a lot of our protocols are extremely simple. And they're that way because people have to feel like they understand into. A lot of them don't anyway, but at the very least, there is this sense that like, if the DAO is helping to create the protocol and the DAO is largely filled with people who are retail or who are relatively new to finance, they're going to come up with things that are not super sophisticated, and then a more sophisticated player might be able to exploit them in some way, or at least trade in a way that retail wouldn't necessarily expect. So if you embed intelligence into the protocol itself, then you give, I think, retail a little bit more of risk mitigation, or even like profit generation opportunities that usually you have to have a special pass or access to a lot of liquidity or wealth or data scientists to be able to use.
Yeah, I think some of the concepts we've been thinking about with smart markets and DeFi at Sifchain is it hits different people in different way, and hitting in like a good way of like, if you're just a liquidity provider, it impacts you and benefits you in kind of like a passive way. If you're a hardcore trader, a daily trader, you have now additional tools that you can use to help you out a little bit more. Do you want to expand on all of like, kind of like the use case of me as a liquidity provider? I'm providing liquidity. I kind of just want it to be there and to sit there and to do well. Like, how does smart markets play well with this type of user base?
Yeah, I guess I'll talk about it maybe, using our actual example, right? We had PMTP, this really awesome monetary policy that was super great. And there ended up being a market crash, which, made us, take it out and, revise. But conceptually actually worked really well. Our token rose 70%, let's say, in 2 weeks. And a lot of very big institutions came in and said, hey, we want to support this just before the crash. The idea for a feature like that, and maybe modifications that we've done since, is as an LP, you're basically coordinating with other LPs in terms of like how you value a specific token. Our token for Rowan was one great example. You could theoretically do it for any token. And if you have this coordination among LPs, now all of a sudden traders have way more signal as to like what tokens they should long. If the this token's more valuable, then as a trader, you're going to want to long that token. And we're kind of probably going to bring something like that back when we have margin trading. So you can take advantage of that opportunity where the LPs are like, hey, this token's valuable, but then long it for additional gains. And then I think as a trader, you're looking for opportunities, right? So traders want signal. And again, signal is very hard to come by for a retail person. If you're a retail, you're probably looking at what are your friends doing, what are influencers telling you to do, what feels right. But all of those signals are tainted in different ways. There are a lot of sort of social manipulation things going on. Influencers are certainly not above being paid to show things that may not make sense. And then you don't have that much time as a retailer. You can only do deep dives on so many things. You don't have a team of analysts and so on. I think that if the exchange, right, in our case, is telling you, or the protocol in general is telling you, hey, this is the token that's going to go up in value on our exchange, that is extremely obvious signal. It's something you can sort of programmatically analyze and know that that signal will be made available. So the traders get more signal, and the LPs basically coordinate to provide that signal. And for something like margin, let's say, the LPs benefit because they get a shit ton of interest revenue. If it's just basic swaps and they're getting a lot of swap revenue, it may be that they get native buying of the asset, in our case, Rowan, or whatever token that they decide to support. You get a lot more buying demand for that. So I'd say that that's like one way that this would touch people. But again, this idea of smart markets has so many other connotations we haven't even really touched.
Yeah, the way I look at it is it's like, and we've talked about this a lot too, it's like various levers that come into play. And it's like, okay, there's DeFi, and there's what you can do with DeFi. And then you start to introduce these features into DeFi, like margin trading, for example. And then you start to introduce these like levers that are associated with margin trading as well. And all of a sudden it takes something that's interesting, really interesting, and makes it super interesting of like, whoa, there's a lot of things to play with and a lot of flexibility here. Do you have any concern with the introduction of these kind of levers, of like certain manipulation or certain like negative things coming from it? It's like you introduce these levers and it's like, oh, now we have to deal with the levers existing now, which can take any way that it's going to go. Do you have any concerns with that at all?
Yeah, I first want to say sort of what's already going on and the problems that we see there. This smart market opportunity gives the chance for the average person to kind of fight back. And then second, I will sort of talk about what are the risks and how do we deal with those risks for governing these things. Mm-hmm. So number one, again, a lot of VCs sort of coordinate and they're like, hey, this is a token, we really want to buy it, we want to promote it, we want to get our LPs involved, we want to like make sure that our influencers on the payroll or whatever are promoting it and so on. And then a lot of what seems like organic retail activity is actually extremely influenced by VCs and or people in the know, right? It can be also people from foundations. I think if you've had a good run or two in crypto, whether you're a builder or a trader or a VC, it's all very blurry. And so I feel like a lot of the things that you would want to do with smart markets are already happening in these, to some extent in like every asset class, but definitely in crypto it happens quite a big deal. Again, I feel like Terra is a great example just because, I love the platform, I love the community just because they were so impactful and supportive to the Cosmos ecosystem. At the end of the day, there were a lot of people calling out that model is not viable, but the hype and the VCs and the support and the money that was thrown at it kind of like encouraged retail to ignore some critical flaws. Mm-hmm. And there's speculation as to how are different people being remediated? Was the remediation fair? Anyway, when it comes to how you govern smart markets, that's something that like we have started, let's say, building a playbook for, but I believe we need to get a lot of feedback on and iterate on over time. So we've talked a lot with, like, say, block science, right? These really awesome people who have thought about computational governance for a while, and their general take is you build systems that simulate markets, and then you apply these policies in the simulations and see how well they work. So maybe that's a spreadsheet, maybe that's something more advanced, like some kind of Python simulation of markets. And I think that can work well. I think that's also it takes a lot of time, and like you have to simulate so many different pieces and components. The more advanced the simulation, the harder it may be for an average person to understand. And also I think, a lot of the people we work with on things like that are like, career data scientists, or at least like highly analytical, highly experienced. It's very different from someone who may not have that level of sophistication. And so I think the way that you would govern a system like this, assuming, let's say, the highest grade of sophistication, is the way that you would govern any kind of like, control theory based system, right? Any kind of energy flow system, any kind of architecture system, right? Like how do we decide how water flows through pipes? How do we decide how electricity flows through a grid? We can take those same standards and decide how money flows through an ecosystem. But all of that, rigor, it takes a lot of time. It can only be understood by certain people and so on. And so there has to be, I would say, a tremendous amount of education and communication, right? On the communication side, it's just like, this is the goal, this is what we're trying to do. That people kind of in their own way just describe risks as they see it, right? There are different constituents. Some people have a small amount of money, some people have a large amount of money, some people have different assets in their portfolio, some people have different hold time preferences, et cetera, et cetera, et cetera. Let them just voice their own opinions. And just communicate. Even if they don't understand everything, at least they can kind of share their feedback early and often. And then I think the flip side is sort of the education piece. It's like, yes, sharing your ideas is helpful, but there also needs to be a way for you to digest what, frankly, like a researcher, academia, or, more advanced practitioners are communicating. I feel like, the analogy that I got, again, from a block science guy is when you walk across a bridge, you don't know the entire physics of the bridge and structural engineering and so on. You should just sort of trust it because there are standards in place that exist to make these kinds of things work. But at the same time, if you have feedback on, your experience crossing it, the width of the sidewalk and things like that, like, your opinion is very valid and should be considered. So I expect this to be a dialogue that we have, over the coming months and years as we, think about smart market features.
Yeah. I've had a lot of conversations this last couple of days, which have been really interesting, about decentralization in general, and like how to properly do it instead of just like, running full-fledged ahead and like decentralizing everything from the get-go. And I think what you're touching on, I'll get to the question for it, is like, how do we decentralize it in a way that's healthy, safe, and is done responsibly, right? It's not like, all right, we just created these things that are super powerful, and like, here's the keys, good luck, have fun, let us know how it goes. But it's more of this like, all right, let's educate and like teach you basically how to build a bridge, and then maybe we can back our way out of it slowly, as like you can now build any bridge. What are your thoughts on just like overall decentralization in smart markets, and especially these powerful features that like, eventually handing it over to being completely a decentralized thing?
I mean, I think when we sort of rolled out PMTP, there's highly decentralized in the sense that the entire community voted for it through an on-chain governance vote, as they did for any other feature that would kind of be deployed. And there was like a lot of communication, a lot of education, but I think it could like have used additional decentralization, the concept of maybe ownership, right? Like to actually understand like what is it that's going to happen, and like what should I expect. The sort of longer term thing that I imagine is if you have a feature that you want to propose, what you do is you describe how that feature might work, and then you simulate that feature, and then you show, hey, like this thing raises a shit ton of money, and that simulation might even have like real-time market analysis or market data coming in, so you could like, hey, like yesterday, if we implemented this yesterday, here's what would have happened in the market, and so on, right? So very, very sophisticated simulations. And if there's disagreements about whether the feature is good or not, a lot of that will have to do with how accurate was the simulation really. So I think it would then be sort of decentralized amongst people who can write and read simulations. That's kind of how I imagine a future for this. And then I imagine that there's maybe a question around, like what are the idealized rates? What are the idealized parameters? How do these things even fare entirely in comparison to other features that may be more traditional or familiar and so on? And I think for that, there just has to be, again, dialogue, right? Like these cryptocurrencies are entirely basically like, plutocratic, right? Whoever has the token supply, can vote for a particular thing. They're also sort of political traditionally in the sense that like whoever, speaks a lot on Discord or Telegram kind of, or it gets involved in committees and so on, like they can influence things well. So I feel like those natural processes are going to play out, but there's probably this third thing, which is sort of like who understands the math the best.
Yeah.
But like as long as you communicate openly and honestly often, then you should attract more and more people who can independently come up with ideas and suggest them. And I guess, I would definitely stress that like these kinds of things need to be, the parameters need to be like very easily like accessible, right? It should be that like as you're trading or doing anything, you know what's going to happen as a result. Even if you can't predict entirely, at the very least, like there shouldn't be a lot. It's like what's the swap fee on a DEX, right? It's similar. It's like, hey, what is the buyback rate or the whatever smart market metric rate? That should be like very clearly obvious for people.
I don't think we've talked about this before, but it seems like it's like, and maybe in passing we have, but it's like a step in the direction of really introducing some like intense artificial intelligence. At least it's ripe for the potential of introducing artificial intelligence. It's like it just naturally like, learns from itself and gets better and improves and improves and improves to the point that it's like, obviously getting to the point that it's like it's reacting so near to real time that as long as you get, the math right, that it seems like it's like ripe for success.
Yes. Plug to the term decentralized autonomous marketplaces, plug to the term, decentralized autonomous hive mind. These are things that we discussed in an article, I think like 2 years ago, and quoting from, some thoughtful leaders. There was an Andreessen Horowitz partner who wrote about this a while back. I talk about this a lot with other sort of cryptocurrency leaders. That's coming. Like I just recently communicated with a thought leader on this, and we were kind of honing in on the term super intelligent markets. But yes, that is the direction.
So I want to leave some time for some questions here, but I have one more question for you. Just in terms of like releasing some alpha and things like that. I don't even think we've talked about this before, but I think our last conversation you said you had like 70 different ideas in your head that you could like come to play with. What's on the horizon for Sifchain and smart markets and DeFi? What can our user base at Sifchain expect? Maybe over like the next year. Or 3 months. A lot can change in a year.
Look, I think the community wants us to deal with the basics, frankly, right? Yeah. So it's like we're working on this margin MVP. You'll be able to long row on with any token or long any token with row on. We'll probably have some conversations about, hey, what smart market things can we do to enhance that experience? And there are definitely ones that would get LPs a tremendous amount of interest, like in the hundreds or even thousands of % APR depending on circumstances, but it's kind of up to governance to discuss those things. And I think after that we want to see how that's digested, like let people kind of sit and marinate with that. I could indeed rattle off 70 ideas right now. We don't quite have the bandwidth for that, but I think consistently having hundreds of % of interest from borrowers who are longing a specific token that they know is going to rise in value because of some smart market feature, and if you can engage in that experience, I think that should be very attractive. And then I think once people have experienced that for some time safely, then we can ideate further.
Beautiful. We have about a minute and a half left, and I did want to leave some time in case anyone had questions about anything.
Is there a training program? Is that what you have?
Are you referring to more of like the education aspects of it? So yes, I'll answer this one. Something we learned really, really distinctly when we launched PMTP is that we educated very heavily at a certain level, and we really hammered on that level. And I think where we missed the mark a bit was going at different levels and getting to the point. I think you were having a conversation recently, like if you can like talk to someone about it like at the bar and like have that person really understand what it is that you're talking about, not the level of like, you're sitting in Discord all day and that's like your life that you're living and breathing. So our ideas of like how do we actually educate more? Does it include educational programs? I think that that's actually an amazing idea of like how do we teach these people what's going on so they can also then turn around and teach everyone else what's happening as well. That's why successful education is like if we teach something and then they can turn around and successfully teach it to someone else, then I think we've really hit the jackpot. Yeah.
Yeah, I think we just ran out of time, so I'm going to answer as directly as I can before I get chucked. So a few things. Number one, that calc is not rocket science. Our sort of goal is to open source actually our entire ETL pipeline for the data we get on chain and then allow anyone to do that kind of calc. And we have really amazing data scientists in the community who have already done a lot of custom calc like this. That said, for your question, modifying, say, traditional impermanent loss calculations to consider some smart market metric, because it's relatively straightforward, as long as we just ask the right person to do it, get them a decent sized grant, and then had the the UI involved as well, we could totally consider that like an important priority if it is for people like you. All right, with that, I think we'll roll out. I appreciate the questions and hope to talk to you more later.
Thank you.